Hi, I'm Grant Stephen.
And I'm Chris Bernier.
And we're the two investment guys. This week, Chris and I want to turn back to the markets and look at some of the factors going on there. First of all, we look at the indices. Toronto Stock Exchange is up about 2% this year. It's actually the global laggard amongst the markets that we follow. We look at the Dow Jones Industrials in the US, that's up about 9%. We've got London up about 4%, Chris. France is up 11% year to date. Germany, of the major markets that we follow, is the global leader at 24%. Kind of the shining light in the Eurozone, I guess you could say. We look at the Asian markets. We've got Tokyo up 4% so far this year, and Hong Kong is up 7% so far this year. Now, September often is a scary month for investors, and markets can get rattled and a bit nervous. And Chris and I went back and looked at some statistics for you. If we go back to 1950, Chris, 61% of the time September was a negative year. However, the average was it was down less than 1%, actually 0.8%.
Yeah, absolutely. Yeah, the month of September has been a little bit spotty for performance, but if we look at the last 7 years, 5 of those 7 years have been positive. And if we look at, this is an election year in the US, the last 6 election years, 50% of the time have been positive. So it's not as scary as some of the longer term statistics would suggest. So what do we expect for September this year?
Well, there's a lot of macro factors at work right now, Chris, and one of the ones is this quantitative easing, or QE3, round 3, perhaps. We should know more about that later this week. And it's really tied to the employment reports that we're getting out of the US, and in particular the most recent one, which was weak. 96,000 jobs with some revisions lower in the prior couple of months. Means that there is a chance that QE3 is going to come into play. That really means that the US Fed prints a bunch of money to buy back some assets. It's not quite that simple, but that's really what happens. And that has a ripple effect in a number of other asset classes.
Yeah, absolutely. If we look at the US dollar, for instance, it has a tendency to weaken the US dollar, and that causes commodity prices to rise because commodities are denominated in US dollars. That would actually be a benefit for the Canadian market, and we would probably see the TSX play a little bit of a catch-up in that scenario.
Right, so that trickles down, or those dots connect to currency issue. If we look at recent data, very recent data on the Canadian trade deficit, it was the weakest it's been since Stats Canada started keeping data on this all the way back to 1971. Why is that relative? Well, I think a lot of us consider that the central bank in Canada wants to raise rates and is going to have a very, very difficult time when we have that kind of issue in Canada, when we're an export nation.
That's right. Another factor impacting currency is recently Moody's, the credit rating agency, suggested they would consider lowering the debt rating of the US, which obviously has recently had some negative impact on the US dollar and could further cause the US dollar to weaken going forward. So Grant, what should people be doing in this environment?
Well, it's a similar story, Chris, to what you and I have talked about for a long, long time. First of all, portfolios need to have balance, and by that we mean you do need some fixed income or bond GIC to offset volatility in the equity markets, and vice versa too. As well, we talk about diversification. Look, who 8 months ago would have thought about investing in Germany, but it's the global leader of the major markets. So there's an example of why diversification is important in portfolios. And as always, we talk about yield, where that portfolio needs to generate a cash flow as markets go through these more turbulent times. And we're not necessarily saying September is going to be negative, just that we're aware of the statistics and some of the things that are grinding there. So it's probably important to have a look at your portfolio in that regard.
That's right. If any of these factors are of interest to you, please feel free to give Grant and I a call. You can reach us at twoinvestmentguys.com. Thank you for your questions and comments. Please keep them coming.
Join us next time. Chris and I are going to continue to update you on some of the dynamics that we see at play. So until then, I'm Grant.
And I'm Chris.
And we're the two investment guys.